Here's the police. Police are here, guys. So we'll have to talk to him here in a second.
Yeah,
I have a... Okay. Yep.
BitBoy has been arrested. Is China manipulating Bitcoin? And are your funds safe on this exchange, which is rumored to be insolvent? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter, AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Introducing Altcoin Buzz Alpha. Now, manage your crypto portfolio with regular updates and top insights for only $15 a month. Get hot Web3 trends, undervalued crypto gems, daily portfolio strategy, and responses to your crypto queries. For more information, check out the links down below. The Dollar Strength Index, or DXY, has achieved its highest level in nearly 10 months, indicating growing confidence in the United States dollar compared to that of other fiat currencies like the British pound, the euro, the Japanese yen, or the Swiss franc. Moreover, investors are concerned that this surge in demand for the US dollar might pose challenges for Bitcoin and other cryptocurrencies. The DXY confirmed a golden cross pattern when the 50-day moving average surpassed the longer 200-day moving average, a signal often seen as a precursor to a bull market. Despite some investors believing that historical trends are determined solely by price patterns, it is important to note that in September, the US dollar exhibited strength, even in the face of concerns about inflation and economic growth in the world's largest economy. Market expectations for U.S. gross domestic product growth in 2024 hover at around 1.3%, which is lower than the 2.4% average over the preceding 4 years. The slowdown is attributed to factors such as tighter monetary policy, rising interest rates, and diminishing fiscal stimulus. However, not every increase in the DXY reflects heightened confidence in the economic policies of the U.S. Federal Reserve. For example, if investors opt to sell U.S. Treasuries and hold on to cash, it suggests a looming recession or a significant uptick in inflation as the most likely scenarios. When the current inflation rate is 3.7% and going up, there's little incentive to secure a 4.4% yield, prompting investors to demand 4.62% annual return on 5-year U.S. Treasuries, marking the highest level in 12 years. This data demonstrates that investors are avoiding government bonds in favor of security of cash positions. This may seem counterintuitive initially, but it aligns with the strategy of waiting for a more favorable entry point. Investors anticipate that the Fed will continue to raise interest rates, allowing them to capture higher yields in the future. If the S&P continues its downtrend, then investors might exit risk markets regardless of their scarcity or growth potential, at least initially. In such an environment, Bitcoin could indeed face negative performance. However, China could be about to change the course of Bitcoin. Box Mining on X wrote today that Shanghai People's Court has officially recognized Bitcoin as a unique digital currency in China. Remember, China's official stance on crypto remains a ban. Why is this important? If the ban is lifted, the China money we're all waiting for will come pouring into China. And demand for Bitcoin is very high in China right now because the Chinese yuan is going to shit, billions of yuan being converted to US currencies last month alone. Along with the Chinese property market crisis, with Evergrande, the largest property developer, going bankrupt, and there's a huge price gap between physical gold and ETF gold. People in China are rushing to buy gold to preserve buying power, and Bitcoin is digital gold. The demand for Bitcoin is so high in China that people are buying it for $33K. I do think that the next bull run will be led by money in Asia, so we'll need to keep a close eye on what's happening over there. Randy also just posted his weekly Bitcoin price TA video on this channel yesterday, which is definitely worth watching for the levels you need to watch out for right now. And for the rest of the week's TA videos, you can find them on our Altcoin Buzz trading channel, linked down below. Crypto influencer Ben Armstrong, previously known as BitBoy, has reportedly been arrested while live streaming outside the house of a former business associate who he alleges is in possession of his Lamborghini. Before the YouTube stream, he posted that he was going live soon from a very special location. Less than an hour later, Armstrong was live streaming himself at the residence of a consultant and NFT investor, Carlos Diaz, who is understood to have links to the hit network. Armstrong went on a tirade claiming that Diaz wanted to kill him and alleging he has links with the Houston Mafia.
Carlos threatened to kill me. A guy that works for the Mafia threatened to kill me.
At almost 19 minutes into the stream, Armstrong was met with local police, who turned up and asked if Armstrong had a weapon on him, which he denied.
Have a weapon on you?
No, I do not.
Okay.
I do not.
So
I have one in my vehicle, but I do not have a weapon on me.
okay.
Okay.
He was then ordered to put the phone down, and the stream goes blank for the remaining 17 minutes, though the audio can still be heard of a conversation between Armstrong and the police officers. According to a listing on the Gwinnett County, Georgia Sheriff's Office, a Benjamin Charles Armstrong was booked on September 25th at 9:11 p.m. Ben tweeted again this morning saying that he's out after doing 8 whole hours in the slammer. In late August, Hit Network, which controls the BitBoy crypto brand, cut ties with its public face, Ben Armstrong, citing issues surrounding substance abuse and financial damage to employees. Since then, a couple of lawsuits have been filed and retracted by various parties involved. Armstrong even asked for donations on September 20th to cover his legal battles, which riled the crypto community. Understandably so. The price of Optimism's native OP token is leading losses among the top 50 cryptocurrencies, falling as far as 10% on the week ahead of a $30 million token unlock. According to data from Token Unlocks, 24.16 million OP tokens, which account for roughly 3% of the circulating supply, are scheduled to be unlocked on September 30th. At current prices, the unlock will see a little more than $30 million worth of OP tokens hit the market, with 15.49 million going to core contributors and 14.26 million set aside for investors. Token unlock events form a core part of many cryptocurrency projects, with many teams choosing to gradually release tokens to the market instead of unleashing them all at once. Typically, however, unlock events are viewed by investors as likely to put pressure on prices as a new supply of tokens becomes available for sale. The price of the OP token is currently trading flat on the day at $1.26 after experiencing a brief 3% rally in the past 5 hours. Last week on September 21st, Optimism revealed that it would sell $160 million worth of the OP token to private sellers as part of a planned sale. And on September 19th, Optimism announced its third airdrop, with 19.4 million OP tokens allocated to more than 31,000 addresses participating in the delegation activities related to the network's DAO Optimism Collective, so naturally there's been a lot of reasons to sell OP lately. I expect some kind of short squeeze leading up to the event on the 30th, and then a dump in the days following. Following a hack of $8 million worth of ETH on Huobi, now called HTX Global, the company's advisor Justin Sun announced fresh measures to try and resolve the situation. On September 25th, the crypto community woke up to news about HTX suffering a loss of 5,000 ETH in a hacker attack. In response to the fuss around the Huobi hack, Sun promised users in the community that the platform always prioritizes the security of users' assets. The Tron founder announced the establishment of a Seifu fund so that the platform will always be prepared in such scenarios. Sun stated that the exchange's multi-backup, multi-signature cold wallet system ensures 100% security. Sun reassured users that HTX had fully covered the losses and resolved all related issues. He emphasized that users' assets were secure and that the platform operated normally. According to Sun, the stolen amount of $8 million represents a relatively small amount compared to the $3 billion worth of assets held by HTX users, and it's equivalent to just 2 weeks of revenue for the platform. Sun further stated that the hack was detected immediately after the incident on September 24th. HTX swiftly took action to prevent further losses and promptly addressed all issues, restoring the platform to its normal state immediately. Trading operations have continued without interruption. Notably, as an incentive for the hacker to return the stolen funds, HTX offers a 5% white hat reward of $400,000. Additionally, if the hacker returned the funds, they will be considered for position as a security white hat advisor for HTX. However, if the hacker fails to return the funds within 7 days, HTX will transfer the information to law enforcement authorities for further action and potential prosecution. Adam Cochran, a crypto VC, estimates that Justin Sun, who launched the Tron blockchain in 2017 and owns a majority stake in the crypto exchange Huobi, owes customers $2.4 billion, but may not have the reserves to cover customer deposits. He says Huobi claims to hold $200 million in Ethereum, but only has $120.8 million when accounting for wrapped ETH and staked ETH, according to DeFi Llama data. The exchange also claims to have $624 million in Tether stablecoins. It only shows a little over $120 million in its wallets. What is particularly concerning is that 14.7% of HTX's reserves are tied up in controversial staked Tether tokens, which promise 4.2% returns from short-term government debt via Justin Sun's Tron-based lending platform JustLend. However, Cochran claims that instead of purchasing government bonds, these funds are being funneled to Sun's crypto wallets, HTX, or Binance. Last week, Sun came under scrutiny for printing $815 million of new true USD stablecoins, also used to mint staked USDT to capitalize JustLend. So it is hard to know what's really happening with the exchange. Just be careful and don't keep any amount of money you can't afford to lose on any centralized exchange. We also just posted a video on what altcoins crypto whales are secretly buying, which I'll put in the description below. That's it for Altcoin Buzz News Update. I'm your host, Cody Buffington. Thanks for watching.